Namaskar. In this lesson, we shall try to understand the consumer protection in banking and insurance services. In modern times, it is difficult to imagine any person, whether natural or legal, not availing the banking and insurance services in their daily life. There can be many consumers who, while enjoying the banking and insurance services, facing deficiency in such services. This lesson focuses on the protection of consumers of banking and insurance services, the relevant legal provisions, the appropriate fora and remedies for such grievances. First, let us examine the banking and consumer protection. Banking is known to be important in the economy because it provides services to businesses and consumers, such as offering loans, checking accounts, and various other services. A person who avails of any service from a bank will fall under the purview of the definition of a consumer within the meaning of the Consumer Protection Acts of 1986 and 2019. A bank's job is to provide customers with financial services that help people better manage their lives. As technology advances and competition increases, banks are offering different types of services to stay current and attract customers. This is done so that more and more customers are attracted. They include advancing of loans, overdraft, discounting of bill of exchange, check payment, collection and payment of credit instruments, foreign currency exchange, consultancy, bank guarantee, remittance of funds, credit cards, ATM services, debit cards, home banking, online banking, mobile banking, accepting deposits, priority banking and private banking. All the above services will fall under the major heads like individual banking, business banking, digital banking and loans. When we look at the classification of banks in India, we find that there are different banks which offer a variety of services. They are: 1. The central bank, that is the Reserve Bank of India, which has the mandate of regulating and overseeing all other banks functioning in the country. 2. Commercial banks, which are regulated under the Banking Regulation Act of 1949 and their business model has been constructed to make profits. The primary function of the commercial bank is to accept deposits and offer loans to the public, businesses and the government. A commercial bank is further divided into the following: private sector banks like ICICI Bank, IDFC Bank and South Indian Bank; public sector banks, which are nationalized banks accounting for more than 75% of the total banking sector in the country. They are the banks with a majority of the stakes held by the government. The examples include State Bank of India, Union Bank of India, Indian Overseas Bank and Bank of India. Regional rural banks, which are scheduled commercial banks established to provide credit to the weaker sections of the society, such as marginal farmers, small businesses and agricultural laborers. They typically operate at a regional level in different states of the country and may have branches in selected urban areas. Foreign banks, which have their headquarters in a foreign country, but also operate in other parts of the country as a private entity. These banks need to follow the regulations of the home country as well as the country where they operate. They include Deutsche Bank, HSBC Bank, Standard Chartered Bank and Bank of America and also Citibank. Other banks include the cooperative banks, payment banks, scheduled banks, non-scheduled banks and small finance banks. Now, looking at the deficiencies in banking services, we can see that the most common complaints regarding the deficiency in banking services in India include failure or delay in repaying the deposits, wrongful dishonor of checks due to the negligence or mistake on the part of the bank, dishonor of demand drafts due to the lapse or omission on the part of the officials of the bank, like non-affixation of signatures, failure to mention code number, causing undue delay in releasing the installments of the sanctioned loans, charging interest at a rate higher than the rate stipulated in the loan agreement, failure to return the security documents even after repayment of the old loan, failure of bank to honor bank guarantee, loss of articles kept in the locker with the bank, closing of account without the instructions of the account holder, failure of cashier to account for the money deposited with him at the counter and rude behavior of its officials, etc. A bank is bound by the act of negligence of its staff during the course of employment. Thus, there would be vicarious liability on its part. However, a bank may not be liable to pay compensation for suspension of business due to illegal strike by the employees and when no loss is caused due to the negligence of the bank. Similarly, an increase in charges levied by a bank for its services does not fall within the provisions of Consumer Protection Act. A bank may levy charges for issuance of MICR checks so long as it is not against the directives of the Reserve Bank. This cannot be termed unilateral and taking the consent of each customer does not arise. Now, let us look at the grievance mechanism to address banking service complaints. The Banking Ombudsman Scheme of 2006 as amended in 2017, which has been introduced by the Reserve Bank of India with the object of enabling resolution of complaints relating to certain services rendered by banks and to facilitate the satisfaction or settlement of such complaints. The Reserve Bank may appoint one or more of its officers in the rank of Chief General Manager or General Manager to be known as Banking Ombudsman to carry out the functions entrusted to them by or under this scheme. The Reserve Bank of India shall specify the territorial limits to which the authority of each banking ombudsman is appointed. Any person may file a complaint with the banking ombudsman having jurisdiction on any one of the grounds mentioned under clause 8 of the scheme, alleging deficiency in banking including internet banking or other services. Such deficiencies include non-acceptance without sufficient cause of small denomination notes, tendered for any purpose and for charging of commission in respect thereof, non-acceptance without sufficient cause of coins tendered and for charging of commission in respect thereof, non-adherence to prescribed working hours and failure to provide or delay in providing a banking facility other than loans and advances generally, complaints from non-resident Indians having accounts in India in relation to their remittances from abroad, deposits and other bank related matters, non-adherence to the instructions of Reserve Bank on ATM or debit card and prepaid card operations in India by the bank or its subsidiaries, charging of annual fees on cards issued free for life, and non-adherence to the instructions of Reserve Bank with regard to mobile banking or electronic banking service in India by the bank. Any person who has a grievance against a bank on any one or more of the grounds mentioned in clause 8 of the scheme may himself or through his authorized representative other than an advocate generally make a complaint to the banking ombudsman within whose jurisdiction the branch or office of the bank complained against is located. The complaint in writing shall be duly signed by the complainant or his authorized representative in specified form, stating clearly the name and address of the complainant, the name and address of the branch or office of the bank against which the complaint is made, the facts giving rise to the complaint, the nature and extent of the loss caused to the complainant, and the relief sought for. As soon as it may be practicable to do so, the banking ombudsman will send a copy of the complaint to the branch or office of the bank named in the complaint under advice to the nodal officer and endeavor to promote a settlement of the complaint by agreement between the complainant and the bank through conciliation or mediation. If a complaint is not settled by agreement within a period of 1 month from the date of receipt of the complaint or such further period as the banking ombudsman may allow the parties, he may, after affording the parties a reasonable opportunity to present their case, pass an award or reject the complaint, stating briefly the reasons for passing the award. The banking ombudsman may reject a complaint at any stage if it appears to him that the complaint made is without sufficient cause or requires consideration of elaborate documentary and oral evidence, or in the opinion of the banking ombudsman, there is no loss or damage or inconvenience caused to the complainant. A consumer not satisfied with the award passed by the ombudsman may prefer an appeal before the appellate authority, who is the deputy governor in charge of the department of the Reserve Bank implementing the scheme. More importantly, we can look at the jurisdiction of Consumer Forum to deal with banking service complaints and the procedure followed therefore. It is needless to mention that in all the above mentioned cases, apart from the remedy to approach the banking ombudsman and also the civil court, the redressal mechanism provided under the Consumer Protection Act, like the central authority, the district collector, or the appropriate commission having jurisdiction like district commission, state commission, or national commission, may be approached for the remedies provided under the Act. A consumer complaint may not be entertained by the consumer fora when the matter is sub judice before a competent civil court. A person who acts as surety for another and does not hire or avail service from the bank is not a consumer of the bank, and therefore, his complaint may not be entertained. In cases involving voluminous documents, complex questions of facts and interpretation of laws, rights and obligations of parties under various statutes, the complainants have to seek redressal of their grievances before civil courts and not the consumer forum. Similar is the case when elaborate evidence is required to be taken. Now, let us examine the consumer protection in insurance services. The insurance cases are divided into many categories like travel insurance, life insurance, home insurance, car insurance, marine insurance, fire insurance, crop insurance and medical insurance among them. Most of the cases are seen in medical insurance and life insurance claims. In the absence of any reference to arbitration under the terms of a policy, insurance disputes can be litigated before both a civil court or a consumer forum. If the insurers initiate the litigation, it must be before the civil courts, and consumer fora cannot entertain these disputes. Both the civil and consumer courts have territorial and pecuniary jurisdiction, and the civil court or consumer forum before which the matter is decided is dependent on the value of the dispute and the geographical limits of the office of the defendant insurance company within which the cause of action for the dispute arose. The Indian Parliament passed the Insurance Regulatory and Development Act 1999 on December 2, 1999 with the aim to provide for the establishment of an authority to protect the interests of the policyholders, to regulate, promote and ensure orderly growth of the insurance industry, and to amend the Insurance Act 1938, the Life Insurance Corporation Act 1956 and the General Insurance Business Nationalization Act 1972. The IRD Act has established the Insurance Regulatory and Development Authority, which can be called IRDA, as a statutory regulator to regulate and promote the insurance industry in India and to protect the interests of holders of insurance policies. Disputes between the insured and the insurer usually arise when the insured's claim is rejected either in part or in full by the insurer and that the insured believes is covered under the policy. There can be disagreement between the insurer and the insured in relation to the scope of the insuring clauses, the quantum payable under the policy, the applicability of exclusions or compliance with the policy terms and conditions, etc. Under the Indian Limitation Act 1963, the cause of action for the purposes of calculating the limitation for filing a suit against the insurer will commence from the time that the claim is denied or the date of the occurrence causing the loss. The prescribed limitation period for filing a claim in the civil court or an arbitration is 3 years, whereas the limitation period for filing a claim in the consumer court is 2 years. The Office of Insurance Ombudsman is under the administrative control of Council for Insurance Ombudsman, which has been constituted under the Insurance Ombudsman Rules 2017. The Office of Insurance Ombudsman is an alternate grievance redressal platform which has been set up with an aim to resolve grievances of aggrieved policyholders of all personal lines of insurance, group insurance policies, policies issued to sole proprietorship and micro enterprises against insurance companies and their agents and intermediaries in a cost effective and impartial manner. There are 17 ombudsman centers covering the country situated in major cities. The insurance ombudsmen are appointed by the Council for Insurance Ombudsmen in terms of Insurance Ombudsman Rules 2017 as amended from time to time, and empowered to receive and consider complaints alleging deficiency in performance required of an insurer, including its agents and intermediaries or an insurance broker on any of the following grounds: delay in settlement of claims, any partial or total repudiation of claims by the life insurer, general insurer or health insurer, disputes over premium paid or payable in terms of insurance policy, misrepresentation of policy terms and conditions at any time in the policy document or policy contract, legal construction of insurance policies insofar as the dispute relates to claim, policy servicing related grievances against insurers and their agents and intermediaries, issuance of life insurance policy, general insurance policy including health insurance policy which is not in conformity with the proposal form submitted by the proposer, non-issuance of insurance policy after receipt of premium in life insurance and general insurance including health insurance. Any person who has a grievance against an insurer may make a complaint to an ombudsman within his jurisdiction in the manner specified. However, prior to making a complaint, such person should have made a representation to the insurer, and either the insurer has rejected the complaint or has not replied to it. Further, the complaint should be made not later than a year from the date of rejection of the complaint by the insurer and should not be any other proceedings pending in any other court, consumer forum or arbitrator on the same subject matter. The ombudsmen are also empowered to receive and consider any partial or total repudiation of claims by an insurer, any dispute in regard to the premium paid in terms of the policy, any dispute on the legal construction of the policies in as much as such a dispute relates to claims, delay in settlement of claims and the non-issue of any insurance document to customers after receipt of premium. The Consumer Protection Act 1986 has been one of the most important socio-economic legislation for the protection of consumers in India. Insurance services fall within the purview of this act in as much as any deficiency in service of the insurance company would enable the aggrieved to make a complaint. Disputes between policyholders and insurers generally pertain to repudiation of the insurance claim or the matters connected with admission of the claim or computation of the amount of claim. In the case of assignments of all rights by the insured to the insurer, the consumer forum and the courts generally refuse to accept the locus standi of the insured. The courts have held that insurance companies do not fall under the definition of consumer under the Consumer Protection Act, as no service is rendered to them directly. Neither the subrogation, that is the substitution, nor the transfer of the right of action would confer the legal status of a consumer on the insurer, nor can the insurer be regarded as any beneficiary of any service. Therefore, the remedy available to the insurer is to file a suit in a civil court for recovery of the loss. The Consumer Protection Act 2019 aims to strengthen the existing framework for consumers while also introducing a centralized agency, that is the Central Consumer Protection Authority. The CCPA has wide ranging powers, including the power to initiate investigations and impose such sanctions and penalties as may be required to prevent the violation of consumer rights. By operation of law, an insured can approach a consumer forum in relation to any claim against an insurer. This right of forum is independent of any right which the insured may have under the policy terms to initiate arbitration or court proceedings. The government also notified the Consumer Protection Direct Selling Rules 2021 on 28th December 21. The central government, in exercise of the powers conferred by clause ZG of subsection 2 of section 101, read with section 94 of the Consumer Protection Act 2019, has notified the Consumer Protection Direct Selling Rules 2021. These rules shall apply to all goods and services bought or sold through direct selling, all models of direct selling, all direct selling entities offering goods and services to consumers in India, all forms of unfair trade practices across all models of direct selling, and also to a direct selling entity which is not established in India, but offers goods or services to consumers in India. Existing direct selling entities need to comply of these rules within 90 days from the date of publication of these rules in the official gazette. The direct sellers as well as the direct selling entities using e-commerce platforms for sale shall comply with the requirements of the Consumer Protection E-commerce Rules 2020. The Press Information Bureau, in its release dated 8th February 2023, informed that due to various proactive measures taken by the Department of Consumer Affairs, Government of India, the disposal of cases in consumer courts has been doubled during the period April to July 2022 to August to November 2022. In addition, of total 5,78,061 cases pending before the Consumer Commission, 1,61,134 pertains to the insurance sector. The government on 12th March 2023 flagged 6 major issues, including amending insurance contracts and inflexible policy terms before the regulator, IRD, stakeholders, and urged them to address those to reduce huge pendency of consumer cases. The other issues raised before the key stakeholders include exercise of powers delegated to representatives of insurance companies, out of the court settlements, agents not sharing full policy details with consumers at the time of signing of policy, repudiation of claims on the ground of pre-existing diseases and crop insurance claims, etc. It is noteworthy that currently more than 1/5 of the total consumer complaints are pertaining to the insurance sector across the country. Now, to conclude, from the foregoing explanation, the students must have learnt about the prevalence of numerous consumer complaints and disputes relating to the banking and insurance sectors. We have discussed the most common forms of such complaints, the grievance redressal mechanism under the general laws, sectoral laws and also under the consumer protection laws. It is sincerely hoped that this lesson would serve the purpose of creating awareness among all the stakeholders. Let us meet in the next lesson. Thank you.